The investment objective of the Baillie Gifford Managed Fund is to achieve capital growth over rolling 5-year periods. And that very much determines the fund's asset allocation. Typically, we'll have 75% invested in equities. That's the asset class that's really going to drive returns over the long term. But being a balanced approach, we believe that it's important to have a meaningful allocation, and that's typically 25%, to the diversifying assets of bonds and cash. We appreciate that not everyone is confident with drawdowns, and that's what's great about the Baillie Gifford Managed Fund. It's not to say that there won't be ups and downs along the way, but the allocation to bonds and cash allows the portfolio to be more balanced than if it were just invested in equities. And that's what investors in this fund are looking for. I would describe the investment process as simple and consistent. Ultimately, it's an approach that's grounded in a philosophy which is unchanged since the inception of the fund in 1987, and we believe is as relevant now as it was 3 decades ago. Firstly, we're active stock and bond pickers. And what that means is that the fund is comprised of Baillie Gifford's best regional equity and fixed income ideas together with an allocation to cash. Secondly, we're growth investors. We are looking for exceptional companies run by innovative management teams that can make a real difference to the fund's returns and our clients' savings. And finally, and I'd argue most importantly, we're long-term. Patience is so important because it can take time for companies to be successful, and it can therefore take several years to be rewarded in share price terms. A long-term focus is also why matters of governance and sustainability are so important to our process. Because simply put, companies that are managed out with changing societal expectations are not going to be around in 10 years' time, let alone growing and delivering good returns for the portfolio. From our perspective, as the investment world has become more complex, the simplicity and the consistency of our approach has become more differentiated. It's been key to our ability to generate a return of 10% per annum net of fees since inception. And looking ahead, we believe that our approach can make a real difference to investors' returns over the long term. In looking to find the winners of the next 10 years, we believe that you've got to find different sources of information. So we're looking outside the world of finance for idea generation, speaking to academics, developing a network of great entrepreneurs, and spending time on the ground. Admittedly, that isn't so easy right now, but nonetheless, the flow of new ideas into the fund has been very good over the past 12 months. And that's been reflected in a pickup in annualized turnover to just under 20% as of the end of June, reflecting an average holding period of at least 5 years. But there are actually some very long-standing holdings in the portfolio also, including Atlas Copco, the Swedish engineering group, which has been held since 1999. If we look at some of those new purchases over the past year, they really reflect the diversity of our opportunity set. We are growth investors, but we're agnostic as to where that growth comes from. So we've participated in some IPOs in high growth areas. An example would be Sana Biotechnology, an early stage business where we've been able to build on our long-standing relationship with the company, having held it pre-IPO for other Baillie Gifford clients. Another example would be Unicharm. This is a Japanese personal care business with strong positions in feminine care and adult incontinence products. Now, these might not be particularly glamorous areas in which to operate, but the latter, for instance, presents a great growth opportunity because of aging demographics. This is just a flavour of the new ideas making their way into the fund that we believe will be the great growth businesses of the next decade. We will inevitably experience periods of short-term underperformance. We saw that earlier this year, and we will see it again in the future. For instance, if we go through a period where the share prices of big oil or high street banks perform well, we have little to no exposure to these industries as they aren't companies or sectors that we think are going to revert to being exciting growth prospects anytime soon. So when it comes to the holdings in the portfolio, we have to be patient and deal with the ups and downs that come from investing in a real life business. And we have to remain focused on our long-term investment case, since we expect to perform well when, over the long term, share prices reflect the growth and the progress of the businesses in which we invest. When we look at the history of the Baillie Gifford Managed Fund, there have been a multitude of crashes and crises over the 3 decades that it's been in existence. But throughout it all, we have remained consistent in the way that we manage this portfolio, and that will be the case in the future too. The ongoing charge for the fund is 0.42%, and that's broken down as a management fee of 0.40% and other expenses associated with operating the fund, such as custody and legal fees, that come to 0.02%. This is a fund that is ranked first or second in its peer group for performance over the 5, 10, and 20-year periods to end June, and has a bottom quartile ongoing charge. Brought together, we believe that this represents a great value proposition for investors.